And that sound means that we are live on YouTube for our daily tackle trading halftime report, where we break down the financial markets. We talk about stocks and equities. And just real quick, I do want to acknowledge what happened in New Zealand and just say that it's obviously these kind of tragedies, they grab every one of us. There's no question about it. Cody, I know you're real shook up by it as well.
It just makes me sick that there are people like that in the world.
Brother, I'm telling you, I know the world's a very complex and very, very dark place at times, but there is light in this world as well. And I think one of the things that we need to all remind ourselves is to surround ourselves with positive people that will lift us up. And take a moment to think about the victims and the pain of what happened down there. And it's really, really tragic. There's no question about it. All right, let's talk financial markets. Noah, how you doing today, brother?
I am fantastic, as always.
All right. Markets at a high and going up. Dow up 0.75%. NASDAQ up 1%. S&P fading higher. The only real companies of note that are down, Adobe on earnings, Facebook on the news, and my favorite, GE. We'll get into all those companies. Let's first start with this, though. It is Friday Fun Day. And if you need a nice little pick-me-up, Monty Python again, second day, PSA is on Netflix. I watched the whole thing yesterday. Noah, did you get your homework done?
I only got 20 minutes done, and the dog ate my homework. So.
Oh, my God. I was telling Noah and Cody at the end of the show where the British lady comes in and stomps the charge. By the way, I'm giving away the show, I guess. I apologize.
That's one of those 20 years later spoilers. Or when it come out in the 70s, so 50 years later spoilers.
Yeah.
She looks like Theresa May. And I was trying to find a joke there. Noah will probably find it for me at some point. He's the funny one. But
don't lie to him.
Don't encourage me, Tim. That only leads to dad jokes.
Yeah, it's true. Apple Computer here breaking into a new high. I saw a question in the comments thread here on the Tackle Trading Halftime Report the other day where somebody was asking, hey, guys, do you think that Apple can continue to run? Coach Frank nailed it, saying that we had pretty clear air up to the 200 period moving average. No, we now, after the breakout, and it was a consolidation over a period of time, it broke out. We talked about it day over day over day. What's your read on Apple here? Is it profit-taking point, or do we
it's still
let
running.
this thing ride?
Yeah. I thought it was slowing down a bit because it looked like it. But that's a good example of when you say, no, it can't possibly go higher, and it does. It did. Nice move up to the upside, closing near the high. That's a strong sign. Anytime you're closing near the top, I don't think that's necessarily profit taking time unless you're trading targets. If you're hitting targets, that's great. But if you're trailing stops, give it some room to breathe, because I think that Frank was right. It's going to probably get up to that 190, 200 confluence.
Now, if somebody was long call and they had it built into the rules to go turn it into a bull call, I would understand. If somebody had 100 shares and they had it in the rules to sell a covered call on profit, I would understand that too. So if you're making adjustments off of it, that's one thing. But remember, you should build your trading plan and your trading rules before you have skin in the game. You shouldn't be sitting in a trade where the market is going higher and Apple's up at a high and sitting here wondering, now what should I do? I know we always have that subjectivity, but it's a beautiful chart and really, really running. That consolidation breakout, we talked about it the other day, but when volume can pick up and make a stock break and run, obviously tradable. Go to the S&P 500 for a minute there, if you would know, ES contract. Now, the big question I have for everybody out there, halftime crew, Noah, Cody, I want to get your take. What's going to make this market run? We're breaking today.
Well, technically speaking, I think it can run purely just on technicals. It doesn't necessarily need a catalyst. It would certainly help it, but once it clears a resistance zone, that can be the signal for people that there's buyers, and it can just continue to drift higher. It may not move with a lot of momentum, but it'll continue to drift higher.
Mm-hmm.
So next week we have the FOMC meeting. So the Fed is going to look at rates again. I do not expect them to raise anything. So we get a little bit more dovish natured. We're not doing anything else this year, that kind of talk. And they don't talk about any rises in the future. I think that can be help push the market up. Probably going to talk about that in the newsletter. As well as if we actually get a signed trade deal. A lot of the trade deals already baked into this bullish run that we've had, but the market just wants to see something actually get made. So we've had a lot of like trade talks are going well and the market likes it. Trade talks are doing well. I think if we get, regardless of what the minute details of the deal are, if we can just get a signed agreement to where there's no longer China and U.S. officials meeting on it and it's just the deal has been made, I think the market will like that. So those are the two big things I think can push the market up.
Mm-hmm. Let's go through the earnings roundup at the S&P 500. Could be, corporate earnings. I know that we're going to be getting into April earnings here in about a month. We're in that volatility stage. It's called a volatility build. Maybe next week, Cody, in fact, put this in your notes. Let's talk volatility strategies and the volatility build specifically, because we're about that perfect sweet spot out for vol strategies right now. Adobe had earnings last night, and I know they gapped down 4.5%, Noah. Record earnings for Adobe. Okay. And record earnings on increasing revenue. But here's what happened, and it's the big risk right now, slowing guidance, and they actually issued a warning for Q2. When you see a small gap like that into support on a company that's been doing well, do you just kind of move it into a neutral rating? Like, how do you interpret that?
Well, it is kind of smack dab between the recently established support and resistance zones, right? So that's hard to call. I mean, you got a gap, which we can say, okay, that's a common gap. It's most likely to fill. They did beat earnings, but that lower guidance really does shift sentiment, particularly for the investor class. And so, being smack dab between support and resistance there, I would basically think to myself, I think that's got to go take out the high again or take out the low again to give me some clarity on what the market sentiment really is.
Well, and I'll tell everybody out there the way that I think about it. I think neutral's fine, but when it gaps down, and I believe in the fundamentals, and it's not a catastrophic runaway gap, Noah, I'm willing to put that on a list for a bull put today.
Oh yeah, I don't have a problem doing a bull put on it. Am I going to take it directionally yet? Probably not.
That's right. And there's a difference. See, when you're selling the volatility post earnings, you don't capture the entire volatility crush. But there's still some in there, and there's still some money in there from a credit perspective. Little, 4.5% gap down here on a big company. Bull put candidate for me. Either watch listed or go run the numbers on it for sure. Another company that is moving here today as a reaction to their earnings is Oracle, ORCL, if you'll bring that one up.
The candle's so big you can't even see the gap, Tim. Like that gap down to 51.42 or so, and then ran right back up to yesterday's close. So that gap filled, and clearly they had decent announcement there. They came in a penny above their estimate, I suppose, in that ballpark.
Yeah.
So
go down to an intraday chart. I got a hypothetical for you. Okay. So we gap down on the news. Here are some of the headlines for Oracle. Oracle falls after its fourth quarter outlook disappoints. Zach's analyst blog highlights they brought Oracle down on their earnings estimate. Earnings misses. Actually, they ramp, but revenues surpass estimates, but they had some guidance problems. Same kind of issue. So they had good numbers. Their sales were up year over year. In fact, they're the highest they've been for 5 years. This is a huge company. Cloud computing, they've got all kinds of different things going on. You gap down on the initial reaction. You now have rallied all the way back out. No, if that takes out 53.5, that was a resistance point. Is that a directional buy?
Yeah, I believe so, simply because it's a reset with the new information. So if you come back and looked at it in context, you might have thought that it was overbought or overextended, slowing down. But with the new information, gaps down, gets a fresh start, runs right back up into resistance. Yeah, if it takes out that high, I have no problem being a buyer, and it's got a pretty clear entry around 53.50.
Yeah, I think you can play that, and you could map out a trade directionally, delta-based, above that resistance point on a breakout. I love earnings plays, by the way, especially when there's not 100 of them. Sometimes when you're in the heart of earnings season, it's a little intimidating trying to run all the numbers. But like last night, there were 4 big companies. Another one was Avgo, Broadcom. Broadcom, biggest company out of Singapore, one of the biggest semiconductor companies in the world. They broke out of resistance on strong numbers. In fact, it was a really, really good report. The market liked it. It's up about 9% here today. When you see a runaway gap, for me, I'm more likely to take a delta trade on Oracle than I would be Broadcom, but maybe I'm wrong on that. Noah, how do you read this one here?
Well, I like the breakout. I like the energy. The size of the gap's pretty nifty. That's a good word for you. It's in the old resistance support zone. So I break that down into the intraday chart, and yeah, you could play that. Like you could buy the pullbacks, buy the breakouts. If you're approaching it as a day trader, not a problem. For a swing trade, I think there's potential there. But I think it's a little harder to project out a swing for 5 days when this is the new information you're presented with.
Yeah, I'm with you.
Yep.
Yep. And the last one out of the S&P 500 companies, there are other companies that reported earnings, but we're looking at the S&P here today, is Ulta, one of your favorites, Noah. And here's the beautiful thing about one of your watch list companies reports earnings. You now have clear air as to when you might be able to map out a new trade. Now, it may not be today. It might be next week. It might be 3 weeks from now. But now you know you have 3 months between what this event was today and the next time you got to deal with it. This is one of your favorite companies. How do you read that big gap out on strong earnings, strong performance, sales, earnings? They beat their estimates and they held guidance pretty good across the line, quite frankly.
Well, first I have to explain why this is one of my favorite companies. It's because I have 2 teenage daughters who are really into makeup now. And I'm just trying to recoup expenses. So, they got a nice little breakout there. And it's how I got my daughters interested in trading, is saying, oh, you guys like that store? Well, let's go look at their stock. It's been performing really, really well. Nice breakout, high energy, still trading up near the high of the candle. So you got a little bit of profit taking. What this breaking above resistance, this has the potential to be a runaway gap, like you mentioned, Tim.
I'm sitting here with one of my students wondering if there's a delay on his YouTube. He's got his earbuds in. Everybody say hi to Cody. He's halftime crew. And by the way, Cody, now you're live on YouTube.
How are you?
Yeah. Cody lives here in Utah, and I mentored him last year. He's been a part of our community for about 5 years, I think.
Yep.
Yeah, 5-6 years. And we're sitting here doing some trading. And I said, if there's a delay, you could go in the kitchen and hang out if you want. But he's enjoying this so far. I love Ulta, and I'm with you that if you know a product of a company, you're more likely to trade it successfully. Your daughters, purchase makeup. You watch the company. You've known it for a long time. I'll give you an example for one from me, Spotify. I listen to Spotify religiously. It's my music streaming service. Other people like Pandora or whatever it is. Bring up Spot if you would here, Noah. They just announced today that if you have premium on Spotify, that you get Hulu thrown into the package.
Well, that's a bargain at twice the price, Tim.
There you go. I know that there's content everywhere out there, and we've got all kinds of things going on.
Buy one for double the price, get the second for free.
There you go. I mean, that's marketing 101 and pricing 101, right? Everybody likes to feel like they're getting a deal and extra value all the time. No, I see a rotating trend. There's some caution in those pivot points, though. Take my bias out of it because I love the company.
Well, I'll tell you what I see on this is I might see a slightly different opportunity here. And here's why. We talked about this yesterday in the Traders Lounge with McDonald's. This is a smaller scale, though. It's got a consolidating triangle and earnings is coming out. So I see that as a straddle play.
Hey.
So the quickest way to take your bias out of it, Tim, is to play it both ways.
That's true. First of all, that would be a really interesting straddle mock-up because you're going to have volatility building, implied volatility rising. You could catch profit from a bi-directional move. If my bias wins and it goes up, then great. And if not, and it goes down, then great. That's a bi-directional trade. In the chat, somebody type in Vega trades. Vega trades. We're going to be featuring quite a few Vega trades over the next month or so. I do want to bring that system and that style into our thinking here in our halftime reports and in our halftime crew. There's quite a bit going on across the board. There's no doubt about it. Markets are running higher. As I look at the S&P, one stock we got to talk about is Facebook. Buddy, what's going on with Facebook? I know you did some research on this one, and it's in the news all the time. What is happening with this company?
Oh, they're just trying to commit suicide. Oh, I'm kidding. Some of the top officials for Facebook have decided that they are going to exit. So, and this doesn't really help them after if you hear that there is an investigation into the way they're processing their their user data. And then shortly after that, one of the top executives says that he's going to be stepping down. That just, to me, screams foul play. That someone's in the wrong and someone's stepping down because it's going to come out that there was, things going wrong with that. that news is why obviously we've had 2 days of gapping down on Facebook. With tech sector up the way it is, I'd be looking to, definitely short Facebook if we get a trigger.
Mm-hmm. I don't know about that. Obviously, a trigger below 160, I would be right on board, 100%. Nowhere.
That's my thought, and yeah. I can see it with it the way it keeps gapping down like this. If we get some seriously bad news, I can see it triggered below 160 in a heartbeat.
Noah, what about you?
Well, I've got a bias on it because I was bullish on it with the call ratio back spread and had a nice little profit working on it. It gapped down, took my profit away. If it breaks 160, yeah, you shift bearish. But look, it's still above the 200 period moving average with a big shadow, and I don't know if they're gonna succumb to any investigative pressures. I think they might be bulletproof because who knows, they're Facebook. But
they're too big to fail.
I did wonder that exact same thing, Cody. When I saw the news of the resignation of the stepping down, I thought to myself, "Uh-oh, rats jumping from the ship." Yep. So maybe it recovers, maybe it doesn't. Cool thing is with a back ratio, if it goes down, I just adjust it and turn it bearish. If it runs back up, I'm in good shape. Otherwise, if it stays stuck in the middle, I've got some time decay to worry about. But other than that, it's that's hard for me to give an analysis when I have a bias, like an actual bias on a position. I want it to go up most.
I think it's a big thing. We talk about leadership all the time. And when the CPO of a company that literally has been there since 2005 leaves, I mean, I'm sure Chris Cox is a incredibly wealthy man from his Facebook ownership and shares over the years and all the things that he's done with Facebook. I'm sure he could have stayed or left or done whatever he wanted to. He just recently, we're launching and announcing new products, new ideas, new ways they were going to build new content out there. And now he's leaving. I think that's an issue. But I also have a fundamental belief about the world. Everybody is replaceable. Okay. We all get into this mindset that, I've got this job, or I've got this position, or I've got this title, and that company they underappreciate me, or they undervalue my effort or input, and I'm going to leave and take my talents elsewhere. Well, great. You see it in sports all the time. Sometimes that works out and sometimes it does not, but they're going to put somebody up there and it is next man up. Bill Belichick is going to the Hall of Fame with about 6 Super Bowls because of that, right? I mean, you can find somebody else to come in and take that job. So I think this might be a buy the news situation, okay, where it gaps down and it's now sitting in the middle. I'm not buying today personally. Now, I do know a trader who day traded that today. We were talking about it privately in our Slack channel. But in my opinion, neutral until I see some confirmation one way or the other as we move. Difference of opinions here, which is good. It's good in life. Top 5 losers on the S&P here today. Whirlpool, Noah, WHR, if you would. Let's rapid fire through a bunch of these. There was a jury that came out and ruled against them in some case, or ruled for them actually in some case, but the stock is down. It would make me want to dig into what that is. Not tradable for me when I see a news story like that. What about you?
I don't see anything that makes me want to buy it. And I don't think there's a ton of room to the downside with that 200 period moving average. So limited downside.
Independent oil and gas companies are lower here in many, many regards across the board. EQT is one of them. They're mostly neutral in a range, but I've been very concerned about this industry. The energy sector has leadership at the top. Exxon and Chevron are doing great, but a lot of companies like this, EQT and Halliburton, they're not doing so great. In fact, today they are down. Take a look at HAL if you would as well. Some of these might even be tradable to the downside. Noah, that's a bear retracement pivot right there.
I dig the setup on Halliburton to the short side. That's a good look one. I might have to put that on a scouting report watch list this week.
Yeah, not a bad call. We're going to be bird dogging all day here today. GE is down 2.7%. Makes me happy. Go ahead and take a peek at the chart and just say, $10 is.
See, that's the signal I was looking for yesterday when we were talking about it, where we were talking about that lower high Foreman head. There you go. Trigger to the downside. That might also make our watch list.
It very well could.
Is there even available shares to short, or does it have enough short interest that there are none?
I shorted some yesterday. So it absolutely is one of the most traded companies in the market, So there's so many shares available to trade on this company. I tried to put a short on Tesla a few days ago, and I got a rejection order immediately saying there's no shares available inside TD Ameritrade. So yeah, GE is, some others may not be. You got to check short interest if you're playing the stock. Actually, that's one of the reasons why some traders trade options. With GE, I could make an argument on both sides. It's a small company, but it does have risk on covering and news and all that kind of stuff. The options might be the better way to play GE. You'd have to debate that one. That's a different discussion for a different time. Winners in the market, Lam Research is breaking out. LRCX, Applied Materials is breaking out. Broadline semiconductor equipment stuff is all really looking good. Look at AMAT and LRCX. Semiconductors are benefiting right now from these market conditions. AMAT's Tackle 25 stock, is that a triggerable breakout next week potentially?
Yeah, I'd like to see it clear the high it's out there. If it can clear 41.20-ish, I'd feel pretty good about that being a breakout.
Yeah, I'm looking at that as well. Skyworks, SWKS, a lot of times industries and sectors, they all move together in unison. Texas Instruments, look at the semi holders, SMH. Reminds me of an old mindset that when the market runs, semis lead the market. That is technical analysis and rotation 101, John Murphy stuff from the 1990s. I know you were trained on that as well, Noah. When you see the semis showing strength, that might give you a little bit more confidence in his breakout on the S&P.
Anytime I see a whole sector running the same direction, that first speaks to the high level of correlation in the markets. Mm-hmm. But when I look at all the different semiconductors and they all look like the index chart or they all look like each other, I think it makes it easier to trade directionally because you have a built-in pressure or bias that you can see. So I like semiconductors here. I agree with that. I think there's some good opportunities. This is where you could go and do your stock picking. And, you could trade the index, the semiconductor holders ETF, or you could go find your favorite, pick them off of the holdings. Find out which one you think has got the best technical setup.
I agree. And that's the great thing about the market that we're in. People that are, complaining about the S&P approaching resistance and worried that it's not a good market for that. Well, go pick your own individual companies, get into the reports, get into the stock report and the option report and go through those watch list and the pick list and become a stock picker. There's always advantages you can find across the market. Move on to the Dow Jones Industrial Average, the large cap 30 here. Oh, the Dow. I read a crazy stat a while back. I don't quote me on this. I think I'm just rephrasing something I read. But if you put like 10,000 in the Dow 100 years ago, it'd be worth $100 million today with the dividend reinvestments and equity gains, Noah.
What was 10,000 worth 100 years ago?
That's a good question.
$1 million.
Yeah.
Yeah, because we all just have that sitting around, that long ago during the Great Depression. Oh, let me just use this 10 grand I have sitting here.
100 years ago was right before the roaring 20s, young man. We were coming out of
I was just throwing a date out there. All right, we're not going into a history lesson here.
Yeah, but here's the thing, Cody. We can actually do math. Like I can take the number 100 and subtract it from 2019 and know exactly what the answer is.
You also said like 100 years ago, so I'm adding in a buffer zone of.
C'est la vie. Fair enough. First company we got to talk about on the Dow is Boeing. Boeing's making a little bit of a comeback here today. First green candle after the gap down through the week. It's an interesting technical pattern because you gapped into old resistance and now we're settling in a little bit. Volume is still pretty high. In fact, the volume today is relatively pretty good, higher than yesterday when it dojied. And there's a ton of headlines on Boeing. First, read it technically before we talk about what's going on with the company.
Well, I'd call that a bullish engulfing candlestick because it swallowed up the previous one. It did push up to a new high. So let's double check one other thing here. Volume upticked as well. So there's either some short covering there or you have some buyers.
Mm-hmm. Obviously short covering. I think there's risk on both sides here. In fact, one of the better ways to play this might be Vega. You could do a bi-directional kind of debit condor or inverted butterfly or something along those lines. If you are going to trade Delta, you might want to use a ratioed spread like you talked about with Facebook. Could be a topic for a trader's lounge next week, Noah. Here's my thing. They just took the black box and they shipped it to France because they didn't want the U.S. to investigate it. They wanted to have the air of any kind of influence out of it and a fair review of it. If that comes back and says Boeing is in the clear, that stock could ramp, and if that comes back and says there was a problem they knew about, that stock could get crushed. Who knows? I don't know. It's on the no touch list for me, until I get clarity there. There are advanced strategies you can do. I don't know about you. What do you think about those bi-directional ideas?
That'd be a good question. I think I'd have to really analyze the volatility to give you a better answer.
More complex.
It comes down to the cost. If they were expensive, they may be less functional. But if I was selling on them, maybe the butterfly would work.
Mm-hmm. As I look across the board here, Microsoft continues to run. It's one of the reasons why when people tell me something's overbought, I usually kind of roll my eyes. Microsoft was overbought. There's no question about it at resistance, but you had a very, very strong green candle. We talked about trailing stops. We've talked about this all week long, halftime crew. Be patient with profits. Be impatient with losses. Let your winners run, cut your losses short. Now breaking out to new highs, 2% here today, Noah. Give me a read.
I like it. First of all, volume has been on an uptick, so that looks good. Strong candle near the high. Closing near the high on an uptick in volume. That it has every look of a breakout. It needs to maintain the close above resistance. It's still at the top of the channel, as far as short-term technicals go. But again, a strong close above resistance could encourage more bulls to buy in. Mm-hmm. So that could keep it running up, and we might see it drift on up towards 120 before you find a pool of sellers. That's what it really is going to search for. It prices. If people are buying it up, they'll buy it up until they hit a price pool where there's some inventory, and you see some profit taking coming in.
We got to look at the credit card companies. American Express and Visa are just really incredible right now. We talked about PayPal earlier in the week. Visa is hitting an all-time high. American Express is about to break out of the 115 level, which was the 52-week high, I believe, also an all-time high. There's so much strength in the market that people aren't seeing when we look at the overall Dow or the S&P, because if you look at the YM contract, it's mixed. Mm-hmm. And that's the nature of the market. But there are companies in the Dow that are just incredibly hot right now, Noah. Visa and American Express, it would be really hard to buy a breakout after it's already run 6 candles. I know I would probably pass, but you can't really argue with the strength there.
Oh, no, not at all. I would not bet against that. I saw some random chat group on Facebook last night talking about short selling one of these. Mm-hmm. Because they believed it was overbought. And I thought to myself, well, a fool and his money will soon be parted. You can't sell into that kind of strength as a contrarian. So where that top's going to come in, I think is entirely up to the profit takers.
Yeah. Oh, loving these charts. I'm just really loving a lot of these breakout potentials. You look across the board, Travelers, which is not a company I trade hardly at all. Insurance company, right? TRV about to break out of an all-time and 52-week high.
Ooh, pretty cup and handle. Gives me a Pavlovian response. Makes me want to buy regardless of the stock.
IBM, which I have not traded in a long time, has a little bit of a cup and handle type feel to it as well. Breaking into 140, clear resistance and triggerable.
Yeah. It makes me a chart pattern junkie there. Just seeing those, I get that warm and tingly feeling sometimes.
But let me throw some water on the fire here.
Getting a little hot and bothered over here. Woo!
Yeah. WBA, bear retracement. Another down component. Earnings coming up, though.
I like that for a short. I got enough time to get in and out before earnings.
4-2 does give you that window. I've got a 14-day kind of rule for Delta trading, different rules for Vega trading, obviously, but yeah. And then I see United Health. And this one, I have real concern about these healthcare plan companies, Cigna, United Health, all of them across the board. They obviously had that bad news a while back. That's an M pattern, kiss of death style here, Noah.
Yeah, that's a kiss of death below the 200 period moving average, below your 50 period moving average. It's testing the 20 period moving average. That is a kiss goodbye setup with a big old support zone there at 255. So you've got a lot of good, solid bearish signals. That also might have to make a watch list this week.
There is a lot going on, my friend. Let's move on to the NASDAQ, talk technology here as we go. And Obviously, the NASDAQ has been leadership here in the last little bit. For me, it has run right up to the top of my rankings. I have it now rated number one out of all the indexes on the backs of Google and Microsoft and some of the strength in Apple and so on and so forth. And the semiconductors, Cisco, all those companies we just mentioned who had earnings. Noah, there's some old pivot points here. And I think it gives us the opportunity to teach something. How do you handle when the pivot point resistance was a one-off as a context of a downtrend? Do people stare at that pivot point from back in October and really form it as strong psychological resistance? Or is it something else? Give us some context to that.
Well, yeah, I mean, it's twofold. There's a psychological threshold where it becomes a bit of a self-fulfilling prophecy. This is a conversation I was having yesterday with one of my students, Michael. We were talking about, the chart patterns and the ideas behind it being just self-fulfilling prophecies. So the idea that people look out there and see those old pivots, they start to anticipate and they plan trades around it. Mm-hmm. So maybe there might be limit orders waiting out to sell near resistance. And as soon as it gets there, it forms resistance because of all the sell limit orders because people place their targets there. It's an interesting question to ask. A one-off pivot I take less seriously than something that's tested multiple times. And so, you might look at a pivot like this and think, oh, that's a one-off pivot. But if you look back over history, you see support resistance neighborhoods, and you can see where that zone's tested a few times. And, that price point is significant, and that's right where it's at right now. So break through that, then you've got another double top out there. Hey, if it tested it twice, I take it more seriously than if it just tested it once. So absolutely, it's something that traders look at. And this is, again, I love to bring up this new indicator anytime I get the chance. It's that volume question. How much volume accumulated at that pivot point is, I think, another clue as to how strong it is. Mm-hmm. And there's a big overhead resistance point at about 7,400 where it's tested a few times.
Yeah, I agree. And obviously there are a lot of sentiment and opinions built around these prices because a lot of people who were stuck in the fourth quarter, they might have been watching their portfolios go down all fourth quarter, Noah, waiting for it to come all the way back up. And now they're back to break even. There is some psychology there as well, right? Mm-hmm. And human behavior and all that kind of stuff. I'm sure investors are very happy with the performance this year. Equities have been in a ramp on type environment. Some companies that are grabbing my eye out of tech today, we got to talk Tesla. Got to bring it up.
Do we?
We have to.
We have to.
We have to.
There you go.
Elon Musk. Here's the problem.
I don't know who coined that, but that was clever.
He did, I think. I think he changed his Twitter handle for a day.
That's right. He did do it himself for a day.
They brought out their new SUV, Noah. They announced they're going to close stores, but then they announced they're going to reopen it. They've got constant just drama with this. When did this company become a bunch of teenage girls? Okay. Just constant drama about you can't figure out what the heck is going on with the company. You have so much conflict with investors who are fighting over it. I'm looking at this. The stock is getting crushed here today, only as Tesla can.
What Elon is trying to do, because the company itself doesn't have the fundamentals behind it, is he's trying to occupy your mind, occupy the news. He's trying to keep all of us thinking and talking about Tesla constantly, and it's working.
Well, I'll tell you what. I saw that picture of that big panoramic sunroof in the new vehicle they're rolling out or whatever, and I kind of thought to myself, "That's cool. I might want one of those."
I would buy a Tesla. I want a Tesla.
Yeah, no doubt. I've not driven one, but I've ridden in a few, and they're nice cars. They've got some issues, obviously, but they're still, I think the innovation is really interesting. And I think it's the fanboys like Apple that line up to buy it. So you've got your built-in, potential buyers. My question is can they meet the supply? Can they keep up with the demand for it? Which has been the big question. And based off the chart pattern and the technicals, I'm not a buyer of the stock, but I would buy one of their cars. So
if we didn't know Elon Musk, if he wasn't on this, savant radar where he's the eccentric billionaire, he's all over the place. We had all these opinions about it. Listen, their sales, listen to these numbers, Noah, real quick.
Listen to this joke real quick.
All right. Well, now there's high expectations. I mean,
what's the difference between crazy and eccentric?
I guess it's all in the eye of the beholder, right? It's like beauty,
No, money. Money's the difference between crazy and eccentric.
That's a good one.
That's a very good one. That's a very good one. In 2014, they had 3 billion in sales. In 2014, they had 4 billion in sales. In 2016, they had 7 billion in sales. In 17, they had 11 billion in sales. And in 18, they did have 21 billion in sales. Now, their EPS numbers have been in the negative year over year over year over year. They finally have had some positive quarters. It's not consistent, but if you are truly being fair about the company, all it really is a high risk, high reward growth idea. They're innovative. Mm-hmm. They have products that sell, that people like, and they've made a dent in the consciousness of consumers. People know who Tesla is, whether you own it or not. I'm trying to be open-minded, I guess is what I'm saying. I don't see everything negative in this company. And that's why it still is the most shorted company and the most bought company. And there's so many fights over it. Could you make a bullish case here long-term?
Not with an eccentric chart pattern like that.
Yeah.
No, I'd have a really hard, if you're in it for the long-term, sure. But as a technical trader, I would have to have disposable money to use that to put into that. That's what it comes down to. And if it's schizophrenic. That chart just gives me heartburn looking at it from a directional perspective.
Cody, put it on Twitter. Bull bear pass on Tesla, long-term investment, not trade. I want to hear what people have to say about this one, because I know even within our team tackle, the people who love Tesla probably don't say anything because they know that we haven't been a big fan of it recently. But I want to be open-minded about it. I do want to be open-minded about it. The chart is ugly right now, by the way. Short-term trading stuff is pretty ugly. Bed Bath and Beyond. I can't remember the last time I've been into this store. BBBY is down heavy today, down 3%. NASDAQ component. These brick and mortar retails, Macy's, Bed Bath & Beyond, we talked about LB Brands the other day. They launched some kind of private label home brand the other day, and they're just selling off. I mean, not exactly a great pattern. Break below 14 could be tradable. When you see strong earnings and a trend that was developing that now has failed, is the new information in the last 2 weeks enough to ignore the information from 2 months ago, Noah?
Not in the near term, no.
Yeah,
that type of information, that takes time. I mean, they launch a new brand. Well, okay, that brand has yet to be tested. So that kind of information, I don't think slows down the bears.
Yeah. DocuSign, bring this one up here as well. One of my watch list companies. I keep track of this company. I love IPOs, first of all, after about 3 to 6 months, once they settle in. DocuSign has been very tradable for about a year now. When it was in a downtrend, it was real clear signals. And now we've broken into an uptrend. They had earnings here today. They beat the numbers. They gapped down initially. Now we got a doji. Give me a read on this one.
This is a pretty good example of that textbook IPO pattern where it runs up at first, sells off, finds a bottom, and runs back up. The initial pricing is always the question. I think it's definitely running up, and $60 seems to be a big fat number for it. There's a lot of overhead resistance out there near 65. I'd buy it on a dip. I'd wait for a dip though.
I agree. And, we got to move on to the small caps here. Let's keep moving through the market. Friday fun day. And guys, if you're out there in your halftime crew, just in the chat, just type in hashtag halftime crew or HTC. Let's keep that going. I do like that. RTY is now move neutral for me. Moving average or confirming. You've got, what'd you call it? Confluence or congestion or
confluence, congestion. It's one of those that works. Yeah.
Cody, what was the word?
Confluencing.
I like it. Noah, is that a lower pivot yet?
Not yet.
No.
Needs downward confirmation. So not yet.
Look at this one on the big picture. Go back to a weekly for a minute, if you would.
You bet.
V-shaped recoveries are always tricky. And even though I'm now moving more somewhat neutral, I will reiterate it until it either happens or doesn't happen. I'll be saying it every time we look at the rut. No, if that breaks 1600, it has a lot of upside.
I agree. It is a big number from past values clear back last year in 2018. It's a big number. If they can break that, yeah, you've got some definite demand in the small caps.
Yeah. It's an interesting one. There's some small cap companies catching my eye here today. Cree, $5 billion company, kind of puts you in the mid cap, but bring up CREE breakout now here today on Cree.
It's a decent looking breakout.
I do like it. Yeah. Interesting. I'm trying to read the news here. I look for relative volume spikes, and a lot of times, because the volume in the market will tell you where institutional investors are pushing their money. This is has a relative twice the volume of what it normally trades. Good green candle. That's got to be a watch list candidate here. I'm not going to go chase that trade here today with only 3 hours left in the market, but there's a lot going on there.
No, absolutely. I like the breakout. I like the volume uptick at, clear to resistance zone. You can definitely watch for a good trade setup to form there.
Yeah. Currency markets, we're going to make this real simple. Bring up the dollar real quick. Let's talk about the dollar index. UUP would work, or the dollar sign DXY. I did hear Thinkorswim was dumping all their profit charts, by the way. Coach Mark was complaining about that.
I don't know what's he gonna do.
What?
Mark, yeah, I've got profit chart still, but the new people who download it for, I believe, new downloads don't get them.
I think so. I think that's right. Yeah, they're moving away from them. I don't think that they have a lot of use and for everybody. And so maybe it just is
I'll
about
tell you
money.
what I like about the profit charts. The pattern scanner in there is really good. They've got a really good pattern scanner in there.
I've never really used them. I'm sure
yeah.
there's something there. I've just never really used them. The dollar is fading higher. I'm slightly bullish. What's your read?
Well, I am bullish on the dollar simply because of the current level of interest rates compared to all the other currencies. So I think there's, some demand just in that carry trade because of that. And then, you see some turmoil with Brexit, which will affect a couple of currencies. And I think there's still a lot of talk of slowdown, economic slowdown else, globally. So, hey, yeah, out of all the currencies out there, the dollar's still the king.
Yeah. Yeah, Cody, there's a lot going on in the news with currency markets right now. The Bank of Japan came out and they announced that they were going to hold their policy steady, basically not going to raise or lower. Surprise, right? The pound, they're going to go for a third round of a vote. Now, the anticipation with the pound is that they are going to get some kind of form of Theresa May's deal. I don't have any confidence in that. The lawmakers over there have not shown me that they have clear resolution here, Noah.
It's a quagmire. It really is.
Yeah. Now I'm going to go off on a Family Guy tangent.
My bad. Sorry. We can go back to Monty Python at will.
I will say, though, Noah has used that word about 6 times this week. So I think that's his word of the week is quagmire.
Quagmire. I do like it. As you look across currency markets, the one thing I will tell you, and I'm doing the Forex report this weekend. I'm online. This is what I'm going to be working on. Bring up the euro dollar cross pair. The one thing I'm going to focus on is the idea of trading the two most liquid currencies. And to me, Noah, currencies are so technically driven. Bear retracement pivot. Guys, if you've been out there and you're like, you know what, I want to learn how to trade currencies. If you're a Tackle Trading Pro member, dial in and make sure you go through that Forex report. I will do a deep dive on the euro dollar cross pair on how you set up a trade just using a simple pair relationship. That's a pretty obvious bear retracement here, Noah. What's your read on that?
Exactly that. That is a pretty obvious bear retracement scenario. I'd like the triggers below candle low, probably the previous candle low at this point. Take it intraday, and you get that down into an intraday chart, and I'm looking for a topping pattern like an M, a breakdown below support, retest on a kiss goodbye. But it's got to break that big support zone before I want to take it short. So at this point in time, it's got to break below $1.13 and a little bit below that.
Unless you're enjoying the carry trade.
Fair enough. I know that you do like that positive carry trade in your account.
Oh, I do. Just watching that money just transfer into your account every day. It's just so enjoyable.
I just did a video recently on that carry trade. If you guys don't know what Cody's talking about, it's in our glossary. And actually, our glossary on tackle trading is getting pretty good. We've been building a lot of videos over the last year or so on that. So go and check that out. Let's move on to oil and the other metals markets here, Noah. Crude oil breaking out this week. Very light candle today, though. So it's hard to really get too excited about crude oil on a daily basis. But you kind of like the overall upward movement for the week. Out of the 5 candles, we've been up 5 days in a row. So maybe not today. It looks like we're down 11 cents today. So what's your read?
That's a doji. That my read is I don't know whether that's coming or going today. It's just poked its head up above resistance and does not have a lot of confidence with it yet. It did retest a little bit though. If you look at it from that perspective, the bottom of that doji is a bit of a retest. So if you like oil and you're bullish on it, keep an eye on it. I still have concerns about just overall global inventory.
Metals markets are interesting today. They are all up just a hair. Gold up 0.5%, silver up 1%, platinum. It's just kind of further confirming that neutral pattern there. Gold at 1310 would be tradable. Above that, triggerable, I should say. Here where we are below 2 moving averages, very key ones, and below a pivot point going into the weekend. If you're not an investor, it's probably not a tradable entry. But if you're investing in gold, you're holding, I'm sure.
Yeah, that's a pretty neutral pattern setup right now. So I'd need it to take out a high or a low to give me some clarity on that.
Yeah, and Palladium, just another public service announcement. It has been a juggernaut. It's only up 0.25% today, but we are pressing an all-time high here. I'm going to be watching that one for a breakout next week for sure. I love that metal, by the way. The thing about it is I don't know how many people buy that metal or how many people have ever invested in these metals, because it probably is a little intimidating to go into futures. But remember, the ETF, especially in your IRA, that PALL is available. And there's all kinds of ETFs out there that track commodities that you can trade. Okay, no options on this one. It'd be a directional ETF play. And as I'm looking across these other broad markets, Noah, we're going to do a full report on commodities over the weekend. I don't see anything of note that we need to talk about. One thing on Friday Fun Day here today, as I catch my breath. First of all, guys, if you're out there and you watch our YouTube show every day, do you guys get a lot of value out of this? Do you love this? I'm not fishing for a compliment. I just want to hear it. I guess I am fishing for a compliment, Noah.
I'll give you one, Tim. You are doing a fantastic job. I'm always impressed with just what a great host you are for these. Like,
Tim, that is a nice hat.
That is a nice hat too. I like your new hat though.
Did you see my new hat?
I did. You need to put that on.
It's upstairs. I'll wear it next week. There's you know who the brand is?
No, I don't.
It was Sub Pop, which is a record label from the 1980s and 90s out of Seattle. They have a little store in the airport there. And
isn't that the grunge label?
That's right. They signed Nirvana and Soundgarden and like all those grunge bands. They kind of brought grunge into pop music. So
that just takes me right back to high school, my friend.
Yeah, absolutely. I'll tell you, I was just thinking about it this weekend, and I've got Cody here who has been a part of our community for 5 years, and I'm very grateful. Being a coach and a member of this community, not just a leader, but also a member of this community, I get as much value out of this as you guys do. I got to tell you, being on this halftime report every day is just my daily routine anyway. Might as well come and do it with you so we can all grow together. And I think it's pretty amazing what we're doing here. I want you guys to really start focusing on your business and prioritizing what it is you're going to work on next. Remember, you got to build a long-term investment portfolio. Whether you're young, middle-aged, or at retirement, it doesn't really matter. You need to have some money in the market long-term. And that could be hedged with put options or, conversely with some shorts and whatnot. But build a portfolio that reflects your long-term goals and a short-term trading portfolio. I got a question the other day, and I'm going to throw this out to Cody and Noah. I got it from one of our loyal halftime crew, and a guy I mentored and who is just a friend of mine now. A few years ago, I met him in 2015. He says, Tim, what is one thing as a coach that you continually say over and over and over again, and people continually ignore, even though you say it all the time?
I saw that question. Was that on Facebook or Twitter or something that you got that?
No, well, he might have put it on Twitter too, but he sent that to me in email, and I put it in Slack as well.
Oh, that's where I saw it. Okay.
Yeah. No, you've been training traders, and you've been an educator now for a long time. You've been around the markets. You are an expert at all of these things. Mm-hmm. What is one thing that you feel like you're a broken record about, but people don't always necessarily take and run with it?
Number one cardinal sin among traders that I see broken over and over and over again: position sizing. Mm-hmm. Yep. Position sizing. Kristen stealing my thunder in the chat. There it is.
Comes in like a ninja. Like Don. Cody, you give your friends probably a lot of the rundown. I know that you've been talking about investing and trading to people in your life. What is something that you keep saying over and over again that people do not absorb?
It doesn't happen overnight.
Yeah.
Everyone thinks that they're going to jump in the market instantly, start trading, and become multimillionaires in a year. My mom, she sent me like $500. She's like, see what you can do with this, and it's like, it's $500. I'm not going to turn this into like 20,000 in a year. It's like the time it takes to develop out a portfolio and a process and a plan. That's where I think most people get hung up. They don't realize that you don't always get a 25% ROI. You don't always get a beautiful bull retracement that works out. Most of the more consistent patterns are the conservative ones that are making 2-3% a month. And that's not as, sexy, oh my God, raking in dough as people would think. So I think the time it takes to develop out a trading plan.
See, and I put a lot of thought into this, and I think for me, it's when I keep telling people that you should join Twitter and nobody does. I'll tell you.
You posted that little map for us on whether or not you should use Twitter.
Did you see that?
I did.
Oh, yeah.
Do you live in a communist state? No. Don't use Twitter.
I'll tell you, there's so many interfaces, and I get it. Social media can be intimidating. I was talking to an educator, a teacher, actually, and I guess for teachers, Twitter, if you use it, is one of the best ways to network with other teachers and get like classroom ideas and all kinds of stuff. And there's ways to really narrowly focus what you're following and who you cultivate information from. See, Twitter is customizable. It can be any experience you want. If you want to go onto Twitter and just get all the sports news, you can get that. If you want to get all the politics, you can get that. If you want to argue with people, believe me, Twitter's for that too. But if you just want to get like good trading communication with Tackle Trading, there's a list, the Team Tackle, that's amazing, and I do think there's a lot of value there. But to be serious, I think what you said, Noah, is the number one. It's when I talk to small account traders and I tell them that they should try to build an account that makes appropriate returns, and they don't want to do it. They want to make more money, and so they over leverage and over position size. Mm-hmm. And they don't embrace that thing about trusting the process in the long term. There's a tool on Tackle Trading called the Compound Gains Calculator. If you need a shot in the arm to remember your vision, go and paint out what your accounts will look like in 5 or 7 or 10 years if you make 2% a month. Okay. I don't care where you're starting from. It will be an impressive return. So guys, trust the process, put it in the chat, trust the process. And as a part of that, there's 2 things I want to end with, 2 websites I had you bring up, Noah. Yep. Just a public service announcement. We have to. One of these. I'm sorry. I just have to remind people, we get all excited about the market short term. We're traders. I get it. Guys, the average National Bureau of Economic Research has done all of the research on historical bull and bear markets over the course, and go to the bottom of this table here, Noah, you'll find right there, see where the totals are? Since 1854 through 2009, the average bullish market was 37.5 months, okay? Or 38.7 months. It's that second column of titles. Since 1945, post-World War II, the average bull market was 58.4 months. Right now, in the short term, I'm bullish on the market. We are now 117 months into this bullish market. Long term, fundamentally, I think we're at the back end of a cycle, and we do need to have a reset at some point, whether it's 2019, 2020, 2021. I don't know. But remember to hedge and to understand how to hedge if needed, okay? And then the other one, Noah, and this one just is going to give people anxiety. Bring up usdebtclock.org. Just another PSA. We're $22 trillion in debt. So,
and watching it tick, like I wish my account ticked up that fast.
Yeah. Does this just give you anxiety?
Hey, Cody, I don't want to stress you out here, but the liability per taxpayer right now is $1 million. So, no stress. Have a great weekend, Cody. See ya.
This is why we all watch Monty Python and try to forget that. So that's what it is.
That was a buzzkill.
Sorry. I just need to do both. I always say this when I'm teaching, Noah. I have 2 jobs, as a coach. Build you up so you can see what you're doing and your vision and your skills, but bring you down so you don't get too aggressive or too excited and try to do it all too fast. Same thing with the economy as well. Show the good, show the bad, let you guys make some decisions on how you move yourself forward. Guys, we got a busy day. Tackle trading every Friday. We do our scouting report meeting, and we've got to go bird dog and pick out some picks. Cody, great job. Noah, fantastic job. And we will see you guys. Any last thought here, Noah, for the team?
Well, hey, since you brought it up, Tim, I'm going to go ahead and remind everybody to position size wisely, because there are old traders and there are bold traders, but there are no old bold traders.
I want to do a Monty Python thing about the dude at the bridge and find a way to have position sizing as one of the questions.
What is your
position size?
Cash or margin?
All right, guys, we're out. TackleTrading.com. Get in the game. See ya.